Average detached home prices in the city of Toronto are down $200,000 month over month. That and also much more in today's video. Hello everyone, this is Sam from SaberiSixRealEstate and Remax Realtron Realty Inc. As always, back with another video for you guys here today. If you're new to the channel, welcome. On this channel, we like to discuss all things Toronto and GTA real estate, market trends, market stats, buyer advice, seller advice, building reviews, and everything in between. So if you enjoy this type of content and find it informative, feel free to subscribe and leave a like. That helps with the algorithm. Lastly, if you have any further questions about anything you hear in this video or any general inquiries with regards to the Toronto/GTA real estate market, feel free to use the contact information on the screen and in the description box to get in touch with me. If you wish to do a little bit more of your own due diligence before you do get in touch, just feel free to simply enter my name into Google my name, go through the Google reviews so you have a better understanding of what type of person you would be working with. Anyways, enough of all that self-promotion. Let's get to the point of today's video. Toronto detached home prices are down around 12% month over month. That's about $220,000. That's right, within the city of Toronto, average detached prices in the month of June were at 1.7. Well, into July 2022, the average sold price fell down to 1.515. So a $220,000 drop month over month. But do keep in mind, this is only with regards to detached within the municipality of Toronto. If we just take a further step up and take a more macro look, let's take a look at the larger market, which shows us that the average sold price across all property types, across all areas, in July of 2022 was $1,074,000. This represents an almost $70,000 drop from the month before in June, where the average sold price across all property types, across all areas, was $1,146,000. And here on this graph, hopefully you can see that things peaked in February. And of course, this precipitous decline you see since peak conditions of February is mainly having to do with the increase in interest rates and a overall bearish outlook on the economic circumstances of not only obviously the city of Toronto, Ontario, Canada, but really the world. And the peak market conditions of February were quite crazy in retrospect. And I was talking about it at the time and many weeks after up to this point. You can watch all the videos in between. I mean, really look at it. We had an average sold price across all property types, across all areas of a 1.3. But what about a year over year, right? Because on this bar graph, we're looking at, of course, so far in 2022. Well, in terms of year over year, prices are still up, but only by 1.2%. This is by far the lowest year over year growth up to this point, because the average sold price of July 2021 was $1,061,000, as aforementioned. Now we're looking at $1,074,000. And yes, once again, on paper, this is an increase in average sold price, but a very marginal increase, and an increase that has not been the case thus far. Even from February to March to April and May, where prices were declining, we still saw healthy growth year over year. Now that is actually dwindling more. Now, is it going to get to a point in future months where we are not only down month over month, but we're also down year over year? Well, we'll just have to see about that, but that is a possibility for sure. But what truly plummeted, without any exaggeration in the use of the term plummet, is sales. Sales dropped almost by 50%, to be exact, 47%. That's right, there was about 4,900 sales in the GTA in the month of July 2022, which is a 47% drop from July of 2021, where that number was at 9,300. And thus far, if you guys have been watching this channel, this drop in sales has been occurring concurrently to a increasing inventory or a plateauing inventory. But that has actually changed this month, because inventory is no longer plateauing. Inventory has started to decline, which, not to pat myself on the back, I wasn't the only one who said this, but I did predict this would happen as most recently as my most previous video. Nonetheless, inventory has dropped as well, year over year, dropping about 4.1%. Now, that's still not something that is substantial in my estimate, but it's more than we have been seeing thus far. And main reason of this is something I've discussed many times, is because of course sellers are slow to adjust to the market. Buyers usually adjust much faster, but at some point sellers do adjust. And what has been happening is sellers are saying it's a buyer-friendly market, prices are dropping, days on market are higher, which I'll get to. It's just not a good time to sell unless you have to, especially, by the way, if you've bought within the last 3 to 5 years, right? If you've bought, 25, 30 years ago, it's obviously not the most ideal time to sell, but to you, it does not make that much of a difference, right? Nonetheless, for most sellers, it's not a good time to sell. They're realizing that, and they're either terminating listings and not relisting them, or they're just not going on market anymore. And speaking about being on market, well, property days on market, which I just talked about, has also substantially increased to the tune of 45%, where on average, homes are staying on the market for 29 days, whereas last year, same time, homes were staying on market on average 20 days. Now, where are prices actually up for detached freehold? Because we're going to cover the condo numbers in a future video. For detached freehold, Richmond Hill actually saw a bit of an increase, a bit of a substantial increase month over month to the tune of 16%. That's right, the average sold price of a detached property in Richmond Hill went from 1.6, I believe 1.67 to nearly 2 million, 1.9. And to be very honest with you, I do not quite know what to make of this month over month huge jump, because I am actually not only going based upon the numbers, but I am actively working with a lot of buyers, specifically one buyer that we're looking in the Richmond Hill area for detached properties, Aurora, Newmarket, and Vaughan. And here the Vaughan and the Newmarket and the Aurora numbers kind of correspond to my experience, which is it's not exactly the hottest market right now. Not to say it's performing as bad as the Durham regions or the Peel regions. Nonetheless, it's still much slower than February. And that's also the case for Richmond Hill, to be clear. But there's no other way to say it, but I'm frankly quite surprised with regards to the 16% increase month over month, because that's not what we're seeing with the other areas of York region. And touching back on the areas that are struggling the most, well, Peel region is struggling the most. Average sold price of a Brampton detached property in February, where as we saw earlier, prices peaked, was 1.6. Now that average is down to $1,212,000. That's essentially a $400,000 drop. Same thing applies to Mississauga. The average there in February, peak market conditions were 1.9 for a detached property. Now it's all the way down to 1.5. Month over month, they're actually only down 1 to 2% respectively, which is much obviously lower than, as we discussed in the beginning of the video, the city of Toronto. But nonetheless, in the 2020 chart, when we look at it, it's actually quite dire how Brampton and Mississauga are performing thus far. And we're going to keep the condo specific numbers for my next video. Anyways, if you found this video informative or in any way, shape, or form useful, it'll be much appreciated if you subscribe and click the like button. It helps with the algorithm. Lastly, if you have any further questions with regards to topics covered in this video, or any general questions with regards to the Toronto real estate market or the GTA real estate market, feel free to get in touch with me with my contact info in the description box. Thank you very much for watching. Stay safe and stay tuned. Thank you.